will start from here. So, okay.
Very good morning.
So thank you very much, Andrey, for your time, for having us with us this time. It's very amazing what you are building. Opium is really right now, as with all the crazy with compound, I think is where your project is most useful. So first of all, I would like if you can introduce us, where's your platform, and what do you do, or what are your background?
Sure. Well, easy to start with my background. I used to be a mathematician back then in Russia, and I was doing quite a good mathematical career. So I was winning all the Russian competitions and so on. At some point, I switched to business. I realized I want to apply it somewhere, and I switched to risk management. And then I came to Amsterdam for my second master, and then I started a career in financial world. So I was first a research analyst in fixed income products, and this is basically all the bonds and derivatives. It's a massive, probably together with derivatives, the biggest market in the world. And then I was doing career last like more than 10 years to the senior fund manager of this fund, and that was one of the biggest funds probably in the world. So doing serious career then in finance, and we had a hobby, so-called hobby. It was very interesting what was going on like 6-7 years ago in Bitcoin, in blockchain space, and that hobby become, to say it shortly, become now my real job, my something I do on a daily basis, at least 12 hours a day. And I quit my job at the peak to do this. And that's a background about myself. So I used to be professional fund manager, professional trader, and that's why all kind of questions about this are welcome. So I can tell a lot of stories. You just need to stop me because I can tell.
Okay.
It's
okay. It's okay. I think it's very interesting that there are a lot of people from the financial sector right now entering in the market and to do a lot of things in crypto, because I think financial knowledge is important right now in DeFi and all these things. So that's really a lot of talent entering in the space.
That's true. I've seen it when I was quitting a job and we were setting up the company. I've seen a lot of people from big banks, a lot of people from Goldman. They were going there into the space, and I think that's right. That they will use their knowledge because the knowledge is still valid. So it's a new system. It's innovative products, but the underlyings are still the same. The underlying of human nature is the same. The underlying of instruments, the mathematics, it's not new mathematics. So it's going to work the same way, I can guarantee. But it's new innovative products. It's better, it's faster, so on. And that's why it's good then professionals are coming there. So
about Opium, what's right now, what was your idea? What do you think? Well, I think options, we miss some kind of derivatives in our space, because it's needed when there are a lot of trading, out of risk. I think that kind of products makes an important role. But what do you think, or what do you think that this was important to create a project like yours? And you can introduce us a little bit
let's speak about Opium. Yes. So basically what we decided to do when we started the company with my partner, and why we started, because it was right time, right knowledge, right everything. But it was too many ICOs, and we decided to do something that we believe in. And we started with the derivatives. We started with options, actually. So we built options in Ethereum. Then we did CDSs and futures. And then we realized that we're doing the same when you do derivative, and I will explain in a bit about Opium protocol, but it's important to understand the main idea. When you do derivative on a blockchain, we did 3 different, and all 3 times we were doing the same things again and again, because order books work the same. It doesn't matter what kind of derivative it is. Settlement, secondary markets, the payout, it's all the same. It's very few, very specific points. And we decided to put it into libraries and build just ecosystem that everybody can plug in these specific points and create basically any derivative. And that's what we did. And that's already a very good explanation of Opium protocol, which is on the mainnet and audited, tested, and working.
So it's a permissionless option market, so you can really
not only option, yes, and not only option. You can say you can list the future, you can list the option, you can list a CDS, but you can make any product you want if you can describe the logic of the distribution. So what is derivative? Derivative is two-person, basically on a very simple level. Two counterparties, they meet and they make an agreement about some underlying assets. So, and that's why it's derivative, because it's agreement on the underlying assets. And you can make any kind of agreement. You can say, if it goes up, then you own me, otherwise I own you. You can also say, I pay you a little bit unless it's bankrupt, and if it's bankrupt, you compensate me all the losses. You can say anything you want, and with Opium, not only options, but anything you can describe in Solidity language very easily in few lines can be plugged in. So you can go to CDO, CDS, futures, God knows what. You have some.
Sorry, I have the lights.
And that's why, yeah, indeed, it's permissionless, it's trustless. You can plug in Oracle and you can plug in instrument. Once you do it, it is a derivative.
It's okay. So you have to decide the Oracle, and you have to decide, I think, the maturity probably with that. So you can create from scratch.
That's not even it. So two things you need to decide really. It's the Oracle, so the underlying basically, and you can say any Oracle. We like Oracles on chain. We use Uniswap 2.0 a lot because they really have a good quality and security. But okay, you need to decide an Oracle, and you need to decide the formula of how we owe each other. So the linearly or not linearly whatsoever. And already like 5 templates are there in Opium, so you can say, okay, future done.
And I think that the formula is what are the leverage, or what are the date in which we have. And
this is all parameters. Once you build derivative with an Oracle and instrument, you can list it on the. You can list it as many times as you want with different parameters, because it doesn't matter. It's only a parameter if it expires on 1st of March, 1st of May, 1st of June. So it's basically the same, what we call ticker. It's the same token. It's just different parameters of the token. And well, actually, it's different on the blockchain.
Amazing. And it's easy to create an option. It's how there is an UI, or there are some kind of tutorial to do it.
Everybody can do it. So to start with, everybody can do it on Opium. It's open. It's open source. Everybody can. If you can program, it probably takes you maybe a couple of hours. If you just started from scratch, if you already done it, probably it's going to be 20 minutes or so. I understand that a lot of people, they don't have experience with programming and they don't want to program. So we do it. That's why we create Opium Exchange, and we list there all kind of derivatives. We list now what we think is cool, but already like 3 or 4 derivatives were listed there by somebody's idea. So people basically go to us, say, hey, I think that compound pre-market is a cool idea. That's what actually happened. And with a compound pre-market, why would be interesting? Oh, indeed. So a lot of people who like to go short and long, that's actually a good idea. And we listed literally within like, I don't know, several hours, we listed the future for non-existing token yet. And it was traded. And finally, it was traded in a completely different range than it's trading now.
Yes. Well, I think I know your project because of these options of compound. That is probably one of the biggest right now news, or the biggest development in the community. And I think in the weeks before, I see some option commenting that in Opium you can really sell or buy the comp in advance. So I think for me it was like very, very important, because you can even fix the price you are going to invest, and you calculate what compounds are you going to earn, and you can sell it in advance. So can you explain me a little bit why it was so spread? And because I think it was very used, no? Right now I don't know the numbers, but a lot of people right now comment about Opium, and I think a lot of people has right now in some case close the risk or close some kind of provision, no? Can you explain a little bit why it was very, very useful for compound?
Why it is useful? It's simple, and what we say that Opium in DeFi, we want Opium to be a place where everybody can hedge. And what is derivative? Derivatives is a way to trade a risk. It's always. So I sell the risk and I get reward, or I buy a risk and I pay, well, another way around. So I trade the risk. And we want Opium to be the place where everybody can hedge. And people were already hedging with the pre-market of compounds. And they don't receive the actual compound token, but they do receive cash settlement. So they do receive a price of compound on the maturity date. And if people wanted to buy it and they're not sure about the price, they were buying it literally, I think the lowest one was 17 DAI, so per compound. And the contracts, you need to a little bit understand how contracts work, because for some contracts there is a cap, and we were putting first quite low cap because of expectation. We didn't expect, nobody expect token to go so high. And we were increasing the cap, and it's trading now really, really high.
There's two questions here that was amazing. First of all, it was like the first place where we have like a price discovery. So we at the beginning, we didn't know what compound will value. And the only place where we can see the markets betting for the price was your platform. So it was like the first time we see like a price, or people betting for a price. So it was really amazing, because I was doing a research and we were thinking about what would be the price. But the only place where you can see a real price, because it was people really trying to buy and to sell, was your platform. So it was very useful, because you have the first, it's like the pre-elections vote. It's like some kind of price discovery in advance. So it was really, really, for me, very, very useful to understand what are the expectations of other people.
It is so. And indeed, it's not just somebody saying, I think it should be this. It's real prices where people take risk. So where they trade actually.
Right now, it's in Balancer. There are also right now price discovery. People are in Balancer. That is the next liquidity mining token that is going to be released in the next week. You have also BALs, and you have like a price, and it's really, really useful. And the other question was that, yes, if I was selling a comp, you have explained it, but you can lose a lot. But your product was configured to have a cap, no, to a maximum loss.
Yes,
because that is what I was thinking. Okay, I'm going to sell a comp, but what happens when the price goes to 300? I have to pay a lot in case it was not a cap, no?
Okay, that's a very good question. I will explain very carefully. To add something to the previous question, the price discovery works better the more liquidity it is. And we had some liquidity, so it's not ideal, but because it was not ultra super liquid yet, so it was some okay price discovery. But looking for future, so the more we do it and the more liquidity comes, it's going to be, it's like what I used in real financial world. People use all kind of instrument to see what they call priced in the market. So market pricing in every second a lot of things via derivatives, and people use it to assess the probabilities and see what actually the crowd thinks. So, but that's okay. That's the previous question. And talking about the cap, it's really important, because the derivative is a deal between two people, two counterparties. It can be a market maker, it can be automatic market maker, and a person. It can be two automatic market makers. So it's still two counterparties, and it's very important that the risk of one counterparty, what you can lose, as you said, it's a gain of another counterparty. So what I can gain, what I can win, and that's it. So it's just a zero-sum game between two counterparties, and you need to put a guarantee that I can win something if you go short, for example, and I go long, and this guarantee you can lose everything, and I can earn this guarantee, but I cannot earn more than this guarantee. So unless you want to make a pool of investment and try to distribute the pool, it's always like this. So your risk is my gain, and another way around. So we decided not to go to pools because the pool basically does not give you any more. It doesn't eliminate the risk. It just hides the risk in a tail risk event, in a black swan. So in every pooled protocol, it's still a probability of event that it's not going to be enough money if everybody starts to do the same things. And it's like banks, this is in Compound, this is in Aave. I think Aave actually did it much smarter and better. And we don't want to hide this tail risk. We want to say, okay, this is the risk. And you know in advance what is your maximum loss, and I know in advance what is my maximum gain. Therefore, we can trade derivative a little bit cheaper. For example, if I know I can only earn, I don't know, 200% return, so then I can make a discount and say, yeah, I would buy this future really expensive from you, but because my gain is limited to 200%, which is still ridiculous, but anyway, so I will pay a little bit more for you, and you get a little bit less money for it, but your risk is also limited. You know, that's the maximum you can lose. And that makes sense because if I want to have extra, if I have a lot of risk appetite and I want to have extra gain, I can go and buy another contract which covers another 500%. So the next, and then somebody will sell it to me because it's a kind of tail risk, and I will pay for it. And that's kind of fair risk distribution, and it's logical. If there is liquidity, it's never a problem to buy as much gain as I want, and for you to put as much money at risk as you want and receive more for it. But that's a fair risk evaluation and distribution. And if this is not happening, then we're going to see 2007, 2008. You remember the risk was redistributed all the time, and then they say it's impossible that all these events going to happen at the same time, and of course real estate always go up and so on and so on. But then everything was correlated at some point, and we've seen people jumping from the buildings, and you know.
I know.
So we don't want it, and that's why every contract has initial margin as a cap. So what we put in the contract is what we can lose or what we can gain. But this margin, we can use different margin in different contracts. So at the moment we have contracts on Compound with really small margin, and they trade it really cheap or not traded at all anymore. But we have also contracts for Compound the same, 100% the same, just with more margin. And people would like to go long a lot, but not so many people are sure to go short because they know they can lose a lot, and maybe it's not time for it. Then they would like to have extra maturity, so time. So they would like to. Many people say I would like to short Compound, but not for a week. I would like to do it for 2 months or 3 months. Then I'm sure it's going to be already fair. A lot of people think it's unfair.
And this week we have the people who suicide, because of the Robinhood issue with the derivatives. I don't know, you see the news. One people that have a very big debt, he commits suicide because they have to pay a lot of things. Yeah, so we have to avoid that for sure.
Well, so, that's what's happening, and that's why I always say you need to be sure what you do with derivatives. Derivatives is like a cool instrument. It's like a cool knife, very sharp knife. You really can cut and cook very well with this knife. But if you don't know how to use it, you can also cut your finger. So with this knife, and you need to be sure what you're doing.
So another question is, so what do you think will be useful for people to use your platform? I am thinking about like some kind of product to hedge the risk with your bonds or with your liquidation. What do you think will be the most useful use cases with your product? Because right now they're out of liquidation risk, as you know, in some lending platforms. That could help. And what kind of use case do you think your platform could also be helpful in order to explain the opportunities for people to use?
That's a very good question, because actually we're now working on the liquidation idea. I cannot tell more for now. But in general, we want to be on a hot topics. So in hot topics, some risk is involved. So almost all the time. And we want to give the instrument for people to hedge this risk. So some people say this is not a risk, so I want to take it and I want to get paid for it. And some people say, yeah, this is quite a risk. I'm willing to pay not to have the risk. And because we can deploy instruments really fast within an hour, so we can do 10 instruments per day if needed, we just trying to carefully monitor what's needed at the DeFi, and we deliver it. So now we're preparing this liquidation idea, but we're also thinking of the future swap token to make a pre-market for it and discover the price, allow people to already trade and hedge. And that is our job for now. And of course, the future we want to do it it's a decentralized organization where people just vote, okay, we want this instrument, they deploy it, they trade it, and it helps the DeFi to distribute risks, because the better the mechanism of redistribution of the risk, the less risk are in a system and the more robust the system.
Sure. So
the perfect example, sorry for interrupting you, but the perfect example of this is another project of us, Swap Rate. It's interest rate swaps. Yeah, you can borrowers and lenders they have floating interest rate exposure. So if I put deposit, I'm not sure how much I'll get there, and the same if I pay. And a normal situation, not a great situation right now because it's temporary, but a normal situation, people don't like risk and they like to be hedged. With Swap Rate, they can just make an agreement. I give away all the future return of my floating rate, and I receive fixed return for sure. So if both people who lend and who borrow, if they both do it, then there is less risk in the system, less risk for them, and also for the platform, because people not running to platform and out of the platform with the spikes.
With the spikes of the thing.
So
it's interesting because
like
there are similar approaches in the traditional, the swaps, in the interest rate swaps are also traditional. What do you, the last question, what do you think are the differences between the traditional financial instruments from what we can do right now in this crypto environment? What are the things that is innovation?
That's a really good question, because first of all, my personal opinion that DeFi, I love DeFi, but it's still a sandbox. So it means I expect it to grow, I don't know, 1,000 times bigger.
Yeah.
So it's 1 billion is nothing for financial system. It's really, literally nothing. So, but we see already cool projects and people already creating the micro system. What I think is applicable, which instrument will stay, which instruments will be gone. I think we definitely don't need to put everything on chain, because blockchain is not designed for it. If I want to do automatic market makers on chain, how much gas do I, well, you know how much gas do we spend if you look at the gas prices recently, but it's not needed. It doesn't solve any problem. You can do automatic market making 100% the same way on a layer 2, on a layer 3, on a layer 10, doesn't matter. So with zero knowledge proof rollups, you can still do the automatic market makers. People put their amounts of money into decentralized staking, and then it's all done with ZK proof, and it's settled at the end of the day. So you will still have the same profit at the end of the day, and you don't need to overload Ethereum blockchain, for example. So that's my general view. So we should see a layer 2, layer 3, layer 4, and we already run our order books on the layer 2, kind of layer 2 and meta transactions. So you can put 100 orders, you can withdraw orders, that doesn't affect anything, and it's for free. And I think in general, everything is happening is really good. It's the right way. We will see a lot of derivatives for sure, because derivatives, they make system better and they make user experience better. I think we're going to see a lot of layers, different layers. Not everything going to be done on Ethereum. And we will see still, I think, a lot of financial crisis, so-called, in DeFi.
Yeah.
Because it's unavoidable.
Experimentation, yeah.
But this is good news. So the earlier we see them and the smaller they are, the better the system in the future.
Yeah, sure. So thank you very much, Andrey. We will comment a lot about the option, the things. We will try even to look for if we have some need to create some option for Spanish market. So it will be great to understand how can really create one option. And congratulations for your project. Probably you are right now with a lot of work because of this week have to be very, very busy for you because a lot of people use your platform. So, no, congratulations, and okay, we stay in contact. Thank you very much for your time.
Thank you very much. So we'll stay in touch.
Okay, thank you very much. Very, very interesting. I think we have to